Andrew Holland, CEO of Avendus Capital, with us on the show on News9. Andrew, thank you very much for taking time out. Good to have you on News9. I want to first begin by asking you, there's been a lot happening with the markets in the past 1 week specifically, and the entire 2023 has been sort of a game changer. But most recently, the 5 states that went to elections, 3 states were taken by the BJP, and since then markets have been on a rally. Is this a precursor of what's to come in 2024? What is your big expectation of the markets in 2024?
Yeah, no, I think the markets were had a hat trick of wins. As you mentioned, the BJP winning in those states. I don't think the market was anticipating that type of good result. The GDP growth, which came through a week before, with the RBI reiterating that the growth factors increasing the growth by 0.5% for the year. And also the fact that foreign investors have come back into the market on the basis that the kind of risks of maybe more kind of populist measures hurting the fiscal will not be needed now, and stability of the government. So all of those 3 factors played in, and that will continue to play. I think the market's to the point where it's getting a little bit overboard. But with the flows that we're seeing into SIPs, I think small caps and mid caps will probably have a nice kind of Santa Claus rally in the back end of the year. So nothing to worry about at the moment. But going into 2024, lots of issues I think will come up. But it's more global than it is local, and we'll have to wait and see how those play out and how the markets gets affected by it.
Right, Mr. Holland, this is Krishna over here. My question to you would be that what do you think are the big overarching themes globally that you think are going to impact the Indian stock markets going forward in the year 2024?
So I think one of the, if I take the risk side of the themes, this week's a very big week in terms of announcements. We got the Federal Reserve, but just before that we got the CPI data in the US, and then we got the ECB and the Bank of England, in terms of their monetary policy. So, all bets are kind of saying that everything's going to be fine. Interest rates will look to fall in 2024. But obviously, if that CPI report is a little bit more negative, as we saw with the jobs data on Friday, you could see bond yields rising again and again. That risk of trade happening, which would affect emerging markets and flows to India. So that's one of the, I think, the risk going into 2024 is that global factors could affect India in terms of flows, and of course China remains kind of in that kind of emergency kind of hospital bed, of which nothing's really kind of changing. And that's affecting sentiment towards emerging markets and flows. So I think if those can turn around, then I think India could continue to see flows and the markets moving higher.
All right, and talking about 2023 specifically, the last month of the year has been quite remarkable for Indian markets. Come to think of it, the first week of December itself saw Indian markets rallying at an all-time high. Nifty touching the 21,000 mark. When can we expect the big 24 or 25,000 mark? In your assessment, is that something to look forward to in 2024?
Yeah, no, I think that's a possibility on the basis that given a stable government throughout the year, then what you'll start to see is that earnings start to be upgraded as the multiplier effect of the government capex and private capex starts to play through across many different industries. So I think that will propel earnings growth in 2024, along with GDP growth as well, which I think will be upgraded. Therefore, you could see easily a 10 to 15% rise from here, which will get you towards that 24,000 target that you're looking at.
All right, and to reach that target, what are the factors that are going to play a spoil sport? Let's begin with what are the factors that are going to play up as tailwinds. The GDP numbers have come in for the second quarter of 2023 largely positive at 7.6%, unanticipated. Revised GDP growth rate for financial year 2024 is at 7%. You see India growing at 7%. That growth will then be mirrored in the Indian stock markets growing at about 10 to 15%. So that could perhaps be a tailwind. What could be the speed bumps on the way?
Well, the speed bumps along the way would be some of the factors I mentioned globally. And I think there's concern out there, which, we don't talk about too much at the moment, is if there's any movement later in the year towards, kind of any change in capital gains tax for the stock market. I think that's something that's been worried about. It's not talked about so much at the moment, but if that was to happen, that could be one of the speed bumps for the market initially, depending on what changes were made. But that's something which I think would have a negative sentiment impact initially.
All right, and I want to go to sectors now specifically, Mr. Holland. And one of the sectors that has been a laggard, so to say, underperformer in the year is the IT sector. Lots been talked about IT sector, services sector in India. It's going to be a washout year. It's not going to be a washout year. Revised estimates as far as revenue targets for this year and the next year is concerned. IT could clock in about 6% revenue growth next year. Those are the revised estimates. In line with what is the data coming in, where do you think India is making strides as far as services is concerned? And we've largely been also laggards in manufacturing. Do you think that's one of the industries we'll also pick up on in 2024?
So in terms of the IT sector, I think you've got to take it, you've really got to take this view. And if your view is that you think interest rates are coming down sharply or will move down to say 50 to 100 basis points in the US, that's going to be seen as a growth lever for those tech stocks in the US. And usually we're 6 to 9 months in terms of lagging behind the movements in the tech sector in the US and sentiment-wise. So it'll be a tailwind for India, but it'll be a tailwind, the back end of 2024. But of course, the markets will look at it before then. So I think you've got time between now and the first quarter to see or to take a view on what you think interest rates will do in the US. But I think I don't expect any great movements in kind of earnings for the IT sector, given the headwinds that they're still facing, and it's not going away in the short term. In terms of manufacturing, one of the things that we like is the electrical manufacturing sector, because I think that's going to be, it's like taking an aeroplane out of the hangar and you're just on the runway. It's going to be a long runway for the electronic manufacturing sector. I think there's a huge amounts of growth to come from that across different parts of the industry. So it's not just semiconductors. I know that's what everyone's focusing on, but the whole electronic manufacturing sector could be huge, both domestically and for exports going forward. So I think that's one of the manufacturing areas that I'd be looking at very closely.
All right, time for India to also perhaps move beyond, electronic manufacturing, and that is where the PLI kicks in, Krishna.
Right, absolutely. And even as we talk about electronics manufacturing, we're also having ambitions to be a semiconductor manufacturing hub, and not just a semiconductor. We want to be self-reliant when it comes to manufacturing defense equipment as well. There's a big move towards being Atmanirbhar in just about every single crucial strategic sector per se. Mr. Holland, going forward in 2024, I want to understand, are there any possible, ways in which, India's retail investors can sort of arm themselves on what to expect from 2024? Because we've seen the Indian markets shake off pretty much every single worry in the world possible. It did barely react to the Ukraine war. It barely reacted to the Israel-Hamas war. And it feels like, the Indian markets are Teflon coated in that sense.
Yeah, we've become a low beta kind of market, which is surprising, right? I mean, when markets have fallen, we've gone in half the kind of fallen, but risen as much. But listen, I think in terms of for the retail investors, whilst we can talk about, say, the market's going up by 10 to 15%, I think the themes below the main index are also going to be important to make money. And those themes, and you mentioned one of them, is defense. That's not just an India story, it's a global story, right, in terms of defense spending. Renewables is another area which is a global factor as well as for India. But beneath that, you got, I think, a number of themes which will play out. One is you know, the kind of local kind of hotel, airline industry. You know, you're traveling, I'm traveling, you know the prices you're paying. That's not gonna slow down in any way, to my mind, going forward. So that sector remains a good theme, at least for the next 2 to 3 years. I think the beverage industry, again, both alcoholic and non-alcoholic, where, you know, the younger populations moving up the kind of value chain or price chain in terms of premiumization. Again, it's a runway which is very long for this industry. And so you're going to get volume growth plus margins being improving over the next 2 to 3 years. And I think, you know, the banking sector, you know, if you're going to be a $5 trillion economy, then the banking sector will have to be larger than it is today. So again, the private banks play into that. They've been serial underperformers for the last, you know, 6 to 7 months. So there is a lot of catch up to do by the banking. I know there's some concerns about loan growth and NIMs. But I think that was probably played out in the last 6 months anyway. So I think going forward, we'll start to see the banking sector be one of the outperformers.
All right, those are Andrew Holland's pick for sectors. If you're looking to build an election portfolio right ahead of 2024 general elections. But before I go to that, you know, we cannot have a conversation on Indian economy if we don't talk about gold and crude. I mean, those are two talking points for every average Indian consumer buyer out there. On crude specifically, there's been a lot of movement, $20 per barrel additional payout to $20 per barrel low down within months, to gold prices which are now at an all-time high. What is your outlook on both gold and crude?
So, I mean, in terms of oil, I think that the price is telling us what's really happening globally, and particularly in China, where there is a big slowdown. So, you know, despite the fact that OPEC came with, you know, with cuts in production, the price fell very sharply. So, unless there's any other geopolitical event to happen, which obviously is difficult to kind of forecast, then I think oil prices will kind of drift downwards from here, which is great for emerging markets. In terms of gold, you know, I'm still scratching my head a little bit here because, you know, gold should have been the play for inflation. And now if we're saying inflation's going down, then I'm worried why people are buying gold. Is it because there's something out there which is we're not going to like and it's going to be a safe haven? So I'm not sure why the gold price has been rising so sharply, but obviously, you know, it's good for everyone in India who owns and has gold.
Right. Are you also worried about why gold prices are going up, or you have some inkling what's called a marriage and a yellow metal and how the two of them blend together perfectly in Indian context?
Right. My only concern always is that in an uncertain environment, they always say gold is the best bet. You know, so Mr. Holland, you know, clearly Indians have, you know, are reading these uncertain times and making sure they keep buying so much gold that the prices always remain high. But while we're talking about gold and crude, my other question to you is always about the Indian rupee per se. You know, talk to us from the rupee's perspective. Considering gold and crude are going to behave the way they are, how do you see the rupee going forward in 2024?
Well, it must be said the RBI has done just a tremendous job of keeping stability, you know, despite what's been happening globally. And the geopolitical events. So my guess is this, is that, you know, if you are talking about interest rates falling in the US more quickly initially than emerging markets, then the dollar would weaken. So I would expect the rupee to appreciate a little bit from here, maybe towards the 82 level. But I think we're going to be in that range of 81 to 83, to be honest. I don't see that the RBI would want to see so much movement in the short term. And I said they've done a stellar job of adding that stability, you know, to the rupee, which we haven't seen for a very long time, given all the kind of global events that we've seen in the past 1 year.
All right, and Andrew, before we let you go, I think we more or less established the fact that Indian markets have remained insulated at a time of global uncertainty over the past couple of months to a couple of years. As far as 2024 is concerned, it's a significant year. India is going to general elections. Now, we've seen a rally, an unprecedented rally in the month of November and December on the back of the 5 state elections. Going into 2024, are you anticipating that sort of a rally to once again play out in the D Street, or has the market already factored in the exuberance?
No, I still think the exuberance is yet to come. So you probably could see another 5 to 10% pre-election kind of rally if global factors also play to our liking as well, in terms of interest rates looking to be lowered in the first half of 2024. So that would be the kind of extra tailwind that the market would need to help it push prices higher from here. I think it's not just our election this year. There's many elections, right? There's probably a UK election. There's a US election. Mm-hmm. So these, particularly the US election, I think would have to be looked at. I mean, not quite now, but towards the second half of the year of how that might affect the global economy, and obviously, the kind of in terms of how the US is going to be looking at the rest of the world going forward, and who's going to be the president.